was convinced this is going to be a game-changing asset. It's going to go up, into the trillions sort of thing. 200K. We need to solve a quantum issue first. Q4 is typically the most bullish quarter of the year.
Hello guys, so we are now in Singapore just before Token 2049, and here with you Anna Tutam and our guest Charles Edwards, founder of Capriole Investments hedge fund. Great to have you here, Charles.
Yeah, great to be here. Thanks, Anna.
So can you tell us about your background? How did you hear first about Bitcoin and how did you get involved in the industry?
Yeah, look, I've always loved investing. I came from a pretty scientific background, studied engineering and finance, and was very much into value investing in the Buffett type approach, but trying to systematize it. Then I discovered Bitcoin in 2017 when it was in the headlines and making all the news. And just the more I read about it, the white paper and just diving into the information about it, I was convinced this is going to be a game-changing asset. It's going to go up, into the trillions sort of thing. And just 100% pivoted all my focus into building models and trying to value Bitcoin, trying to come up with what is the fair value of Bitcoin and other digital assets, because there wasn't much about that back then. And most people said you can't value it. And so that was something that really interested me. And just got really into that, publishing articles and metrics and models. And in 2019, just jumped in full time. Yeah.
So did you make models before for traditional assets? Were you running a traditional hedge fund before?
No, not a traditional hedge fund. No, I was working in engineering for a couple of years and management consulting. And my management consulting business, it specialized in supply chain modeling. So I actually was spending quite a bit of time coding models, for example, for Toyota to forecast demand and supply. And they've got millions of items, and every item has a unique profile. Some don't, they only need once or twice a year or even less, and some more often. So that's quite an interesting process, and that kind of got me into the coding and modeling side especially. And then from there, obviously at the same time I was building valuation models for equities, and then discovered crypto and jumped into that.
That's quite interesting. Yeah. So what similarities do you see between building models for supply chain and now for digital assets markets?
Yeah, well, look, I suppose there's some elements of forecasting, which there's some parallels. I think the most similar thing is just the systems set up and structure. So how you code things, how you process data feeds, how you database that. Maybe if you're running it in cloud software using AWS, for example, for hosting, and just system uptime, the importance of that, monitoring. And just having a robust kind of system. That's the kind of unsexy part of it, but that's a lot of the work, is just making sure the whole system functions and is stable and consistent over time.
Yeah, and how do you see the current crypto market?
Yeah, I mean, I'm pretty bullish on the short term. We're having this chat now the last day of September, and Q4 is typically the most bullish quarter of the year. Often you'll see more than sort of half the gains of the year in that period. So that's quite promising. We also have the background of Bitcoin's been lagging gold a lot, and typically you see Bitcoin move quite aggressively after gold has had a big run a few months later. So that's a good tailwind. And we've also got a promising macro environment. So global M2 money supply is growing at about 8-9% a year, which is significant historically, and a strong tailwind for digital assets and hard assets like gold. And then probably the biggest driving factor today is the Bitcoin Treasury company flywheel effect. So at the moment, institutions, being ETFs and Treasury companies, are buying up about 400% of the daily mined Bitcoin supply. And historically, when that's happened, prices only gone one way with that massive supply imbalance. So we kind of model and chart that stuff in real time on capriole.com/charts if you're interested in diving into the data. But the only comparable periods in time are 2020 after Corona crash, and then again on most of the major legs up over the last 18 months or so. So that's a pretty strong tailwind and macro environment for the next sort of 3 to 6 months at least. But we'll just have to monitor the data and see how it unfolds.
So you as well call crypto treasury companies to be a bubble. And as well, I watched you in another podcast, and you told that Michael Saylor is doing well, so he survives that 80% crash on Bitcoin, so it's sustained. But in the future, do you consider it to be still a sustainable model, or is it a big just leverage betting and gamble.
It's definitely, if you will, uncharted territories, I think, at the moment. We've seen this thing before, but uncharted for crypto, and we're relying a lot on human nature to manage this conservatively and sustainably. At the moment, things are relatively healthy. I'll be talking a bit more about that at the presentation at Token tomorrow, but there are some concerning elements and parallels with the 1920s when there was a similar structure called investment trusts, which would buy equities, raise capital and keep buying equities. Basically the same thing. The only difference is obviously now it's Bitcoin. That activity has been effectively outlawed by the Investment Act in the 1940s, and the SEC is heavily regulating, and that you have to have a fund structure and a proper setup to do that now. Crypto avoids that because it's not a security. So it is a bit of a loophole. So the things to watch for are, excessive use of debt. At the moment, debt ratios are relatively healthy. Again, that's something we track on the website. And other factors to consider are MNAV, which is the valuation of the company versus the Bitcoin holdings that it has. And so if it's less than 1, it means that the company is worth less than its own holdings. So you think that's great, it's trading at a discount. The problem is the whole business model of these companies is to issue equity and buy more Bitcoin. And by doing that, they can show a strong Bitcoin yield. If MNAV is less than 1, so they're trading at a discount, you can't issue equity as easily because it's dilutive, so it's bad for the shareholders. So your primary options are either to sell your Bitcoin and buy back your stock to close that gap, or also you could issue debt and then you increase your leverage, so you're pushing on that risk factor as well. So there's a growing number of companies with an MNAV less than 1. It's around 20-25% today, and MNAVs across the whole industry, which is 180 publicly traded Bitcoin companies, has been trending down over time. So that is a factor to also monitor. I suppose the biggest thing here is human nature and greed, right? If you're number 500 Treasury company and you're competing against 500 others, how are you going to stand out? You have to get the high Bitcoin yields, and to do that, you're probably going to start taking some leverage risk to differentiate yourself. So that's kind of the factors we need to watch as this industry basically goes parabolic. In the short term, it's extremely good for price because you've got a massive demand supply imbalance. If people are logical, sensible, manage their risk very well, it can be sustainable. But if there's one thing we've seen many times before in the crypto industry and through history generally, it's that greed kind of takes over. So it is a bit of a, I think a bubble formation is probably emerging. Yeah.
And we talked before as well about 4 years market cycles, but now they seem to be broken. So how do you see the current market shifts, and will we see maybe altcoin season, or will it be just like small corrections with the crypto market?
Yeah, good question. So the 4-year cycle for Bitcoin and the halving every 4 years, which has obviously dropped supply growth rate every 4 years, has really driven a lot of price action behavior in the past because that supply squeeze dynamic. That's less significant now that the inflation rate of Bitcoin is less than half gold. So miners' effective impact on the network is quite small. I think it still has some impact. Probably the biggest impact is just psychological, that you have people who've been in crypto and Bitcoin, especially obviously for a decade. They've been seeing these big price swings in line with that 4-year cycle, and they're going to already start to manage their risk accordingly. And if you're speaking with anyone who's been around for 4 or 5 years, plus they're kind of already doing that. You can see that in the data. The long-term holders of Bitcoin, that's anyone that's held Bitcoin for over 6 months. You can use different metrics for that, but the trend is consistent. You see selling down of those holders as price goes up, and we've seen that already a bit this cycle. So there is some shared dynamics and psychology that plays into it. I think the biggest difference now, though, is again, the mining is not that significant, and also you now have this influx of institutional investors just buying up supply, which we never had at this point of the cycle before. So I think as long as that condition holds, it's more powerful, if you will, than the halving cycle, and it will probably drive price action both up and down depending on how it evolves. Yeah.
So, for example, if we have so many institutional investors getting in, so at some point they will be exhausted. And do you think that Bitcoin may be just like buy and hold assets, and it will wipe out the speculators from the industry?
Yeah, a little bit. I think part of that is actually the size of the asset today. So crypto together is about 4 trillion, Bitcoin roughly 2. it takes a lot of capital to move price up, right? So we're not going to, if you rewind 5 years and we're at 100 billion or 50 billion market cap, right, at various times, it's a lot easier to get those aggressive price movements and the adoption to scale up. And obviously the high volatility to the downside as well. So it goes both ways. That's just less significant now. So you see it in the data. There's a lot less volatility. The drawdowns are much smaller, and it kind of trends up a bit more like, if you will, the Nasdaq or gold. Obviously, still different, but it's moving in that direction, and that's expected for an asset that's multi-trillion and is going after it. The gold's market cap, say 20 trillion plus. So I expect a bit of that. I expect a lot more long-term holding, as you say, because institutions are not going to be, some do, but on net, endowments, pensions, etc. They're not trading; they're buying this stuff long-term and holding it. So you'll see sort of less activity probably on chains we already have, and you'll see more, more consistent sort of trends and buy and hold as being the main kind of market for this asset, I think, going forward.
And as well, you write a lot about the threat of quantum computing. So can you tell more about it? And are you really afraid about it? Do you plan to sell your Bitcoins and other crypto, like let's say in 4 years?
Yeah, so quantum is interesting. It's something I've been interested in for many years. I did a bit of studies in it in physics at university. I've been tracking it since. Didn't really think about it much until a few years ago. And just 3-4 years ago, I was like, oh yeah, it's 10-15 years away, it's nothing to worry about. And now come today, it's something I'm actively thinking about a lot, because it is, in my opinion, the number one greatest threat to Bitcoin and crypto. A lot of the timelines you see on social media are completely false, suggesting it's 10, 20, 30 years away. It's used in industry today. $1 billion of revenue has been generated in quantum this year. It's made significant improvements in optimizations across various industries. Biotech, AstraZeneca uses it. It's been used to optimize bond yield curves in finance, a number of others. And so this industry is very much happening, and the risk really is that to Bitcoin is the breaking of elliptic curve cryptography, so ECC. So what people talk about often in quantum is Q-Day, which is when quantum computing will break all, if you will, classical encryption being RSA. Problem is that Bitcoin uses ECC, which is weaker than RSA. So Bitcoin's the first block to be chopped, basically. It's also a great target because if you have quantum capability, you could start selling lost coins or wallets that are not very active, and people wouldn't know, and you could literally make billions from this activity. So I think that is a risk factor. Timeline is then the next question. No one knows for certain, but if you plot out the trends of what's been achieved historically from the leading quantum companies around the world and what they're publishing officially to achieve in the next 4 or 5 years, most of them are targeting sort of multi-thousand, some 10,000 plus logical qubit capability in 2029, 2030, that kind of region. So that's 4 or 5 years, which is well more than sufficient to break Bitcoin's ECC, which only need about 2,000, 2,500 to do. So the threat is significantly growing, and I've started getting more vocal about it, which is probably what you saw on social media, and I probably will continue to do that because the thing is, while the threat may be 4 years away, it might be 6, it could actually be 3 years, right? If we don't solve it now, then it's too late, right? You can't be 1 minute too late, because then the trust of the whole network goes to zero. And it takes about, best case scenario, about a year to upgrade Bitcoin once consensus is achieved, right? So that's allowing for time to move wallets to, more quantum secure wallets, and if you want to do test transfer actions, it's limitations are basically on the throughput on the network. It takes time. So we really need to be getting a solution selected, I would say, in 2026, next year. I really want to see that happen. If it doesn't, I'm going to be getting increasingly concerned about it, yeah.
Then you're shifting to another industry?
Well, at Capriole, we do trade a few different industries now. It was exclusively Bitcoin and crypto, but that kind of focus shifts based on where we see the opportunity set. For me, 5 years ago, it was 100% Bitcoin. I was basically all in on it personally. And I don't have the exact same conviction today. I still think it's going much higher. I'm very bullish on the near term. And I think all these problems, quantum as well, are definitely solvable. And it's not something we need to panic about. It's just something we need to be actively talking about now to get to consensus and get to a solution. Because I find that most people in the industry are just ignoring it because they feel like it's so far away. But if you rewind to 2021, we just got out of COVID. Were you thinking that you'd be using AI every day in a year's time, right, in your workplace? And no one would have expected that. I would have said it's 5-10 years away at least. It's the same kind of thing now. So I just want to kind of bring the word out there so that people can start taking some action.
Yeah, the recent months, I think like Vitalik started as well being vocal about it, and Anatoly, co-founder of Solana too. So now they are all concerned.
See, I didn't know that, but yeah, that's good to hear. Yeah, we need to spread the word.
Yeah, and what about altcoins? Which altcoins are you buying?
There's some I look. I think I have the most conviction in Bitcoin. So anything I say about altcoins, I may have a different position in several weeks' time. But there's some projects I like, and typically it's linked to strong tokenomics, where they have some kind of revenue model or some kind of product which they then feed back to the token holders. That's not always available. It's very rare actually in crypto that happens. Hype is one example where they have, rebind their token consistently. I like ENA as a product as well, Athena, because I think it's a very scalable product. So the long short arbor for providing yield effectively on perps and making that commoditizable. So there are a couple, and some others from time to time.
What about the Aster?
Yeah, I mean, I haven't dived into it enough depth to give any kind of long-term conviction. I think when it first became public, it was an obvious opportunity simply because of who was behind it, being CZ and the team. So I kind of pounced on that short term, but I need to kind of assess it further to give any tangible comments here today, I think. Yeah.
I got it. And as well, you provide a lot of free public analysis. You post a lot in Twitter. So how is it inherent with your trades in your fund? Because sometimes you need to make some contrarian bets, and as well you need to make profitable trades. So how is it connected?
Yeah. So essentially, my job is doing as much research as I can on the market, trying to find unique opportunities, and that's primarily from a quantitative approach. So processing lots of data, building models, and validating them. Because when we invest, we typically want to have long-term conviction what we're doing is something sustainable, a process. No, we're not necessarily looking for something that will work for 1 or 2 months and then bleed out. So we're a directional fund. We're not market neutral. So we're really looking to capture those kind of longer-term trends, if you will. And so when I tweet, often I'm tweeting about things I'm thinking about or researching. Sometimes I research, sometimes you do a lot of research and the outcome is just not good enough to put in the portfolio and you don't necessarily use it. So my tweets don't necessarily align with the positioning, right? And the other factor is being systematic. A lot of our portfolio, there's trading throughout the day sometimes. Sometimes we hold positions for weeks, but sometimes there's multiple trades a day. So, you can't just necessarily relay them one-to-one. And sometimes I don't agree with all the models, right? So there's a statistical element to it as well to consider.
Yeah. And what's your Bitcoin price prediction by the end of this year?
Yeah, good question. I mean, I wouldn't be surprised if it was at 150K or, give or take 10, 15K around that into the next 3 to 6 months, being the, entering Q4, being the tailwinds we have from macro and the lag we have in gold and that sort of thing. So I think, we have a good 3 to 6 month horizon, especially providing the institutions keep that strong demand up. But yeah, I like to, any long-term view I give is kind of adapted by me day to day, based on the data. But right now, that's kind of where I put it. Yeah.
Okay, that's a bit bearish, not super bullish. When do you expect 200K?
200K? We need to solve the quantum issue first. No, they could, look, I think the next 12 months could be quite strong. I think the conversations I'm having with people in the industry is that there's a lot of institutional flow coming in and they're asking questions about, they don't know a lot necessarily about crypto and Bitcoin, but they want to allocate $1 billion or $500 million, that sort of thing, endowments, pensions, exploring the space. So I think you got this in the background like we talked about before, the trend is more buy and hold. Institutional demand isn't, active trading. So I think we have a strong backflow behind it, which can definitely drive us to 200,000, which is, if we go there, call it 4 trillion for Bitcoin. Gold is, gold's gone up by that much in a few months, right? So I think that's definitely possible. Yeah.
Let's see. Hopefully we are only going up.
Yeah, fingers crossed. Yeah.
Yeah, thank you for the interview.
My pleasure. Yeah, thanks for having me.